Hello friends, and welcome to Looking at the Markets with David Modell. Today I will be discussing the types of RSI divergences. And I have more basic videos on RSI and on RSI divergences. A more basic video, kind of an introduction to get you started. So if you need something more basic, go down to the description below this video and you can click on those basic videos. And then you can come back and watch this one if you want to. And if you need more help, I do offer coaching for trading or investing, and I can help you to put together a plan for your trading or investing, because you really want to have a plan so you know what you're doing. And if you want the coaching for that, you can email me at davidmodell@gmail.com. So let's get into it. Now, the one that a lot of people talk about is when the candlesticks make higher highs while the RSI makes lower highs, or vice versa, like the candlesticks making lower highs and the RSI line is making higher highs. Okay? That's the one that everybody talks about. And yeah, sure, that's a divergence. Okay? If you've got the candlesticks going in one direction and the RSI is going the other, all right? So let's say you have a higher high with the candlesticks and a lower high with the RSI. That's a divergence. If you have a lower high with the candlesticks or a higher high with the RSI line, then that would also be a divergence. Okay, that's a more obvious one, and that's pretty significant if you're a technical trader. The assumption is that the RSI is telling the truth and should be relied on more than the direction of the candlesticks. So if the candlesticks are showing higher highs, but meanwhile the RSI is showing lower highs, and therefore a downward trend, then a technician who believes in RSI divergences might have a tendency to not believe the direction of the candlesticks and might believe the direction of the RSI line more, and might either sell their long position or even take a short position. And the same is true for the opposite. They might see the candlesticks making lower highs, but meanwhile, at the same time, the RSI line is making higher highs, and they might tend to believe the RSI more than the direction of the candlesticks, and therefore they might take a long position. They might buy, in other words. But then there's another type that I think a lot of people tend to ignore, or they don't talk about as much, but I believe it's also significant for people who are into RSI divergences. And it's the type where one, meaning either the candlesticks or the RSI, one makes higher or lower highs, while the other one just chops sideways. All right? In other words, the next high is neither higher nor lower than the previous high. So for example, you might have the candlesticks just going sideways, but the RSI line is showing lower highs or higher highs, right? And then, or on the other hand, it might be the other way around. You might have the candlesticks showing higher highs or lower highs, but then the RSI line has neither higher nor lower highs and just chops sideways. That's also possible. And again, the assumption is that the RSI line is the one that's telling the truth, the one that you might want to rely on more than what you see in the candlesticks. All right, so for example here, you might see the price action going sideways, but then if the RSI has lower highs, you might tend to think bearishly, or higher highs in the RSI, you might think bullishly, okay? And conversely, if the price action is going one way or the other, but the RSI is just chopping sideways, you might not want to believe what the candlesticks say, and you might not want to take any action at all. And here's an example, okay, actually two examples on one chart. So here we have an example of the candlesticks, and you have really just sideways action. It's neither higher highs nor lower highs. It's just hitting once, twice, three times, and just sticking there to this trend line here, this resistance line, all right? But meanwhile, we might believe that the RSI line is telling the truth with the higher highs here. And so you could actually have taken a long position there and you would have done okay. You would have done well with these big green candles. Okay? And then here's another example where you've got the candlesticks showing higher highs, but meanwhile at the same time you've got the RSI line showing at the same time lower highs. Yeah, and so that could be viewed as bearish, and so you could have taken a short position here or sold whatever you had owned, and you would have done well with that, because then you had some big green candles after that. All right, so that's just a basic examples of the types that you might see, and you really want to watch out for that. You have to watch both at the same time and look for those, especially on the RSI line. The higher highs and lower highs, they're usually pretty subtle. They're probably going to be, not always, but oftentimes more pronounced on the candlesticks than on the RSI line. It's a very subtle angle, very subtle incline or decline. It's more pronounced here, but I see this a lot. I see it's just a very gentle slope, and so you have to have a good eye for those things. So I hope this was helpful to you. Please give this video a thumbs up, leave comments, and subscribe to my YouTube channel if you haven't done that already, and hit that notification bell so you'll get a notification from YouTube when I put out videos like this one. I really appreciate it. And if you're interested in the coaching for your trading or investing, you can email me at davidmodell@gmail.com. And by the way, below this video, I'm going to put some links to some free financial reports. And you can download one of them or several or as many as you like. And they're free, so why not check them out? And actually, they're pretty good because I co-authored them. So I know that they're high quality, good financial reports. All right, thanks a lot. Thanks for watching this video. I appreciate it, and I'll talk to you again soon.